Welcome to the Deep Dive, your shortcut to being well-informed. Before we jump in, just a quick note. If you find these deep dives valuable, the best way to support us, really, and make sure we can keep bringing you quality crypto insights is to hit that subscribe button and maybe leave a comment, engage with the episode. It genuinely helps us out a lot with the algorithm, lets us reach more people, and, well, keeps the show going. We really appreciate it. Now, okay, let's get into it. Imagine a country, right? Not just, adopting Bitcoin as legal tender, we've talked about that, but actively building, constructing an entirely new financial ecosystem around it. Like a place where global investors, sophisticated ones, are literally invited to come and participate in this, well, pretty audacious experiment. It sounds like something from, I don't know, a futuristic economic textbook, yet it's precisely what's unfolding right now, today, in El Salvador. It's really quite an unprecedented move on the global financial stage. So in this deep dive, we're going to systematically unpack the groundbreaking investment banking law that was recently approved down there in El Salvador. We'll explore exactly what this pretty radical new legislation actually signifies for the broader world of finance. We'll try and pinpoint who it's specifically designed to attract. And we'll reveal how El Salvador isn't just reacting to crypto trends anymore. They seem to be proactively shaping global crypto policy, and they're doing it through some, well, truly surprising and strategic international partnerships.
Yeah, and our insights today, they're drawn directly from the most recent and pretty detailed reports out there. We've got specific excerpts from a key source titled El Salvador Embraces Bitcoin Investment Banking. These materials basically give us a direct line, a conduit into the operational thinking and, the strategic actions of the Salvadoran government's own crypto regulatory agency. So it offers a really invaluable kind of firsthand perspective on these, frankly, monumental developments.
Absolutely. So if you're eager to grasp not just the what, but the really profound why behind a whole nation state radically embracing digital assets like this, and maybe more importantly, how this could fundamentally reshape the global financial landscape for everyone, then this deep dive is definitely crafted for you. We're going to meticulously pull out the most vital nuggets of information, try to connect the dots in ways you might not expect, and hopefully leave you not just well-informed, but honestly, perhaps a little astonished by the sheer boldness and maybe foresight of El Salvador's whole approach here.
It is bold. And what's truly fascinating, I think, is the deliberate, almost surgical precision of their strategy. This isn't just a blanket adoption of Bitcoin, like flicking a switch. It's a highly strategic maneuver. It feels designed to carve out a very specific, maybe even leading niche for themselves within this rapidly evolving global financial system. It's a purposeful build, definitely not just a casual embrace.
Okay, let's unpack this then. Let's start right at the core. El Salvador's landmark investment banking law. This is pretty significant news. Just recently, the country officially approved it. And the crucial distinction here, the thing that's absolutely central to getting what they're doing, is that this law meticulously classifies investment banks under different, distinct regulatory frameworks than traditional commercial banks. This isn't just a minor regulatory tweak, right? It feels like a profound, deliberate move. It signals a very targeted, very intentional approach to integrating digital assets.
Indeed, it represents a highly significant strategic decision because it immediately signals that El Salvador is, well, they're not attempting to shoehorn the innovative, often disruptive nature of Bitcoin and other digital assets into the existing, often rigid regulatory framework of traditional banking, the kind of banking most of us are used to. Instead, they've actively chosen to create a parallel, almost entirely distinct regulatory pathway. And the most direct, the most immediate impact of this legislative innovation is that these newly defined investment banks are now legally permitted, actually. They're encouraged to hold Bitcoin and a whole range of other digital assets directly on their balance sheets. Now, that is a fundamental, really striking departure from how the vast majority of traditional financial institutions operate globally, where digital assets are often treated with extreme caution, maybe skepticism, and very rarely held directly as primary assets.
That's a really powerful point. So, why? Why go through the complexity of separating investment banks from commercial banks like this? What are the strategic implications? It really does seem like a profoundly clever regulatory maneuver designed for something specific.
Well, the strategic implication is, frankly, profound and multi-layered. By setting up this separate regulatory category, just for investment banks focus on digital assets, El Salvador is creating a kind of dedicated space, a sandbox, if you will, for innovation within a highly specialized financial sector. And this approach It carefully avoids risking disruption or, destabilization of its broader, more conservative commercial banking system, the system that caters to everyday citizens and more traditional finance.
Right, so keep the everyday banking stable, but create this new lane.
Exactly. Think of it like building a specialized high-performance test track just for cutting-edge experimental vehicles, rather than trying to race them on public roads designed for slower, everyday traffic. It allows for rapid iteration, specialization. This differentiated approach, it seems specifically engineered to attract those agile, maybe crypto-native financial firms. The companies that might find the established, often cumbersome regulations of traditional banking systems just too restrictive or maybe not fit for purpose for what they do. It sends a really clear message. El Salvador isn't just adapting old rules, it's deliberately fostering an entirely new financial industry, one that's purpose-built, optimized for the digital asset space, not just retrofitted.
It's almost like they're saying, look, we want to be a global sandbox, but a highly regulated, intentional, and specialized one, specifically for this innovative digital asset sector. That's a dramatically different strategy than just, making Bitcoin legal tender and hoping for the best.
Precisely. Yeah, it moves way beyond mere adoption. It's about foundational infrastructure. It's about inviting the global architects and engineers of a new kind of financial system to come and build and operate within their borders. They're not just facilitating transactions. They seem to be designing a whole new kind of financial machine.
And who are these architects and engineers, or maybe more accurately, who are the clients these new investment banks are actually hoping to attract? Because the law is specific, right? It enables them to offer crypto services to what it calls sophisticated investors. Could you clarify what sophisticated investors means here, and why is that distinction so crucial?
Absolutely. So when the law uses that term, sophisticated investors, it's basically employing terminology that's functionally equivalent to accredited investors, like you'd find in the United States, or maybe professional investors in Europe. This designation typically refers to individuals or entities that meet specific criteria, usually related to income, net worth, or professional knowledge. The idea is that these criteria mean they're capable of understanding and, importantly, bearing the elevated risks that come with less regulated or more complex investments. So we're explicitly talking about high net worth individuals, family offices managing substantial wealth, hedge funds, private equity firms, other large institutional clients. This framework is definitely not geared towards the general retail public. It's not about day-to-day consumer banking.
Okay, that distinction is incredibly important. It tells you a lot about their strategy, doesn't it? So why this specific targeting? Why aim only at the sophisticated players? It suggests this isn't about mass adoption for everyday folks through these banks, is it?
You're hitting on a profoundly crucial point there. Yeah, the explicit targeting of sophisticated investors signals a very clear, very deliberate strategy. They want to attract significant capital, deep expertise, and advanced financial operations into El Salvador's, well, still nascent but clearly ambitious, crypto economy. This isn't about providing every citizen with a basic Bitcoin bank account tomorrow morning, at least not through this specific law.
Right.
Instead, it's about building a robust, institutional-grade foundation for their digital asset ecosystem. This focus aims to draw in large-scale foreign investment, facilitate the creation and trading of complex financial instruments, and potentially enable companies to raise capital, issue securities in entirely novel crypto-centric ways. Imagine a startup raising capital by issuing tokenized bonds on a blockchain, or maybe an investment fund denominated entirely in Bitcoin, or even like a new form of securitized asset representing ownership stakes in Bitcoin mining operations, maybe designed specifically for institutional buyers. These are the kinds of high-level, capital-intensive activities this framework is really designed to facilitate. It's intentionally drawing in sophisticated players who get the intricacies and the risks of digital assets rather than focusing on broad retail access through this particular legal channel. It's like they're trying to build a Wall Street, but for crypto.
Which brings us to perhaps the most intriguing part. This path to becoming what they actually call a Bitcoin bank, using something called a PSAD license. This sounds like, well, like true frontier stuff, almost sci-fi.
He really is, and it's arguably the most ambitious, maybe the most transformative aspect of this whole law. Juan Carlos Reyes, he's the president of El Salvador's Commission of Digital Access, the CNAD, basically the government's main crypto regulator. He made this very clear, very emphatic statement. It perfectly encapsulates the vision here. He stated directly, and this is a quote, "With a PSAD license, a bank could choose to operate entirely as a Bitcoin bank."
Wow. Entirely as a Bitcoin bank. I mean, what does that practically mean, operationally? It feels like we're genuinely stepping into uncharted financial territory here. What are the implications, operational, strategic, and what about the challenges?
Right, this is where the rubber really meets the road, and it absolutely is a frontier concept. To operate entirely as a Bitcoin bank, well, it implies a financial institution whose core operations think its entire capital base, its reserves, its lending, its borrowing activities, maybe even its liabilities are primarily denominated in or managed exclusively through Bitcoin and other digital assets. This is just a monumental departure from traditional fiat-centric banking, where, every transaction, every balance, every loan is anchored to national currencies like the US dollar or the euro.
Okay, so how would that even work? The challenges seem huge.
Oh, they are. Practically, it means grappling with a whole new set of challenges and opportunities. On the challenge side, first off, you're looking at sophisticated volatility management. How do you maintain stability, solvency, when your main asset, Bitcoin, can swing wildly in price? That would probably need advanced hedging, maybe diversified digital asset portfolios, perhaps dynamic capital requirements that adjust based on market conditions. It's complex.
Definitely.
Then there's regulatory interoperability. How does a Bitcoin bank seamlessly connect with the old-school fiat financial systems globally? For international transactions, payments, even just basic payroll for its employees, you'd need innovative bridging solutions, clear rules on cross-currency conversions. That's a huge technical and regulatory hurdle.
And security.
Exactly. Consider the cybersecurity implications. Holding vast sums of digital assets. That requires military-grade security protocols, cold storage, hot wallets, transaction processing. Everything has to be absolutely top-notch. Plus, every operational aspect, from accounting standards which have to adapt to volatile digital assets to internal risk management frameworks, it would all need to be re-engineered from the ground up. Yeah. It's a massive undertaking, requiring immense technical and regulatory foresight.
Wow, okay. But they must see huge opportunities, too.
Oh, absolutely. The opportunities are equally immense, especially for a country like El Salvador that's trying to fundamentally differentiate itself as a leading global financial hub. Such a bank could potentially bypass traditional financial gatekeepers, maybe lower transaction costs for things like international remittances and trade. It could attract a whole new breed of financial innovation and talent. Imagine novel financial products like Bitcoin-backed mortgages or interest-bearing Bitcoin accounts, things that just don't exist in the traditional system. This is more than just an economic policy. It feels like a bold statement of intent, to become a beacon for this emerging financial paradigm. It signals to the world that El Salvador isn't just open for business, but is actively building the infrastructure of tomorrow's finance today.
This really raises a fascinating question for you, the listener. Could this model, this really audacious idea of a specialized Bitcoin bank operating almost entirely outside the traditional fiat system, could it actually set a groundbreaking precedent? Could we see similar digital asset banks pop up globally? Or is it something so uniquely tied to El Salvador's, well, particularly aggressive and visionary pro-crypto stance that it might just remain an outlier? It's a completely open question how this ambitious experiment scales and influences finance elsewhere.
And that very question, I think, is right at the absolute heart of the global financial innovation debate right now. El Salvador is essentially running a live, national-scale experiment, a real-world beta test. And you can bet that virtually every other nation-state, every major financial institution is watching this with intense interest and probably, a degree of trepidation. The outcomes, whether they're successes or failures, they will undoubtedly provide invaluable lessons for the future of finance worldwide.
So what's the big picture goal here for El Salvador? With all this legislation, all this infrastructure building, the proponents, they're very clear, aren't they? They assert it's designed to fundamentally encourage foreign investment and strategically position El Salvador as a leading, emerging hub for the future of finance. And we've seen some early signs already, haven't we? Institutional investors have shown significant interest. They've been a major driver of the crypto adoption that's already happened.
Absolutely. Yeah, this isn't just theory. There's tangible momentum already visible. El Salvador isn't just sitting back waiting for capital to arrive. They are actively, consciously cultivating what they call a pro-crypto regulatory climate. It's specifically designed to attract crypto companies, blockchain innovators, digital asset-focused financial firms. The interplay between having a welcoming, clear regulatory environment and attracting capital and talent, that's a classic economic principle. But applying it to digital assets on a national scale with such deliberate intent, that's what makes this strategy so uniquely compelling, I think.
It's like they're trying to leapfrog development stages.
In a way, yes. Consider this. Traditional financial hubs like London, New York, Singapore, they built their reputations, their infrastructures over decades, sometimes centuries. El Salvador seems to be attempting to dramatically fast-track this process. They're offering something fundamentally different, and they hope, more appealing to the digital asset world, a legal and regulatory framework specifically designed for the digital age. This could lead to a significant transformative inflow of capital and expertise. You could see firms specializing in everything from digital asset trading, institutional custody, to advanced blockchain development, tokenized securities, even crypto-native venture capital, all actively choosing to set up shop in a jurisdiction that not only understands their business model, but enthusiastically embraces it. It truly can be seen as a grand economic experiment on a national scale, testing whether a smaller nation can leverage regulatory innovation in digital assets to potentially leapfrog traditional economic paths and become a global leader in a rapidly emerging industry.
It's a remarkably bold gamble, but one that, if their vision actually materializes, could pay off immensely. It's basically them saying, we're not just open for business for the future of finance, we are actively building the foundations for it right now from scratch.
Exactly. They are, in a very real sense, laying down brand new high-speed tracks while simultaneously trying to build the high-speed train network itself. It's an incredibly ambitious parallel development that really speaks to their conviction.
Now, as with any truly bold national strategy, especially one challenging existing ways of doing things, there's always scrutiny. And it's important we acknowledge the broader context here, because there is a significant counter-narrative to all this enthusiasm and pioneering spirit. Critics argue that Bitcoin adoption and these current regulatory policies, despite the grand ambitions, are not genuinely helping the average person in El Salvador.
Yes, and this is an absolutely critical point. It demands careful, balanced consideration. The specific allegation from these critics is often that these policies, while maybe successful in attracting foreign investment and big players, are primarily benefiting the government itself and larger businesses. They argue it's not leading to widespread tangible economic improvement or, increased financial well-being for the general population.
Right.
It's crucial to present both sides fairly, because while this new investment banking law is explicitly designed to target sophisticated investors and drive institutional growth, the broader policy, making Bitcoin legal tender in the first place, that was initially presented very differently.
Yeah.
It was framed as a way to empower everyday citizens, promote financial inclusion for the unbanked, reduce reliance on expensive remittance services.
So what are the specific criticisms?
Well, they often center on a few key points. First, access to the necessary tech smartphones. Reliable internet, it's still unevenly distributed, there's a digital divide. Second, the inherent volatility of Bitcoin. While it offers potential upside for investors, it poses substantial risks for individuals using it for daily transactions, especially lower income earners. Big price swings can just wipe out the value of their savings or wages very quickly.
That makes sense.
Third, critics highlight that even though Bitcoin is legal tender, many small businesses, many individuals, they still prefer, or maybe are only equipped, to deal in US dollars. So the benefits of Bitcoin adoption aren't universally felt on the ground. They argue the primary beneficiaries are those with the capital and the tech literacy to engage with crypto markets, or large companies that can leverage Bitcoin for international trade and investment.
So this criticism really highlights a fundamental ongoing debate, doesn't it, about the equitable distribution of benefits from a national crypto strategy. How does a nation like El Salvador balance this fervent pursuit of institutional growth and attracting global capital, with the vital need to ensure the financial well-being of its general population in this new digital asset age? It's not just an economic question, it's complex, ethical, social, and it's going to continue to be debated, I imagine, both inside El Salvador and internationally.
It truly is. It forces us to confront that timeless question in economic development. Do the benefits of radical innovation, especially in finance, genuinely trickle down to everyone? Or do they inevitably tend to concentrate wealth and opportunity at the top? This tension is inherent in any rapid economic transformation, and the unique characteristics of Bitcoin adoption just introduce new, intricate facets to this old dilemma.
And adding another layer to this broader financial picture, it's also worth noting reports from international financial bodies mention this, that El Salvador hasn't bought Bitcoin since signing a loan deal, according to statements attributed to the IMF. Now, while this isn't a direct critique of this new banking law specifically, it's a crucial piece of the wider financial landscape, something external bodies are constantly monitoring.
Yes, and this provides a profoundly important backdrop. It's about ongoing international financial scrutiny. It highlights that El Salvador's ambitious crypto journey is multifaceted, and it's constantly under intense observation by global financial institutions. The International Monetary Fund, the IMF for instance, has consistently voiced concerns about the potential risks of Bitcoin as legal tender, particularly around financial stability, consumer protection, and the potential for illicit finance.
Right, they've been quite vocal.
They have. So while this specific bit about Bitcoin purchases doesn't directly slam the investment banking law, it critically underscores that El Salvador's overall financial health, its economic policies, its very public relationship with Bitcoin, all of it is subject to continuous external assessment. There's an ongoing dialogue with influential bodies like the IMF. It's a potent reminder that their pioneering path, however bold, isn't being walked in isolation. Every major financial decision is viewed through the lens of international financial standards and expectations.
It's almost like they're operating under a financial microscope. Every significant move is meticulously scrutinized by the world's leading financial watchdogs. That certainly adds another complex layer to their already fascinating national story.
Precisely. They are undeniably forging their own path, charting new territory, but they are absolutely doing so under constant external pressure and an almost unprecedented level of evaluation from established global financial powers.
Okay, let's shift gears then. Because El Salvador isn't just innovating internally with these new banking laws, they're also actively engaging in some pretty sophisticated international crypto diplomacy and influence. They're extending their reach, their vision, far beyond their own borders. And one of the most intriguing, maybe surprising examples of this is the burgeoning nation-state collaboration between Pakistan and El Salvador.
This is indeed a fascinating development. It speaks to a broader, maybe emergent trend in global economic strategy. We recently saw a high-profile meeting between El Salvador's President Nayib Bukele and Bilal bin Saqib, who is Pakistan's State Minister for Crypto and Blockchain Tech. The shared goal of this, well, unprecedented cooperation is quite explicit. It is to exchange and share strategies for nation-state level Bitcoin adoption, and even to delve into energy policies specifically tailored to foster large-scale crypto mining operations. That indicates a very specific, very strategic alignment between them.
That's a remarkably specific kind of collaboration, isn't it? Especially between two nations that maybe on the surface don't seem like obvious allies in this particular field. What did bin Saqib, Pakistan's minister, say was the core idea, the motivation behind this partnership?
Bin Saqib articulated with striking clarity. He stated, and this is a quote again, "The cooperation is essentially based on how emerging economies that are both under the IMF program can leverage technology and other financial instruments for national growth."
Wow, that quote is incredibly telling. It carries profound implications. Emerging economies that are both under the IMF program. What's so fascinating there is the implicit suggestion of a whole new playbook for national development, for economic sovereignty maybe. It strongly implies that Bitcoin and blockchain aren't just being seen as alternative currencies or speculative assets, but rather as fundamental strategic tools, tools for economic leverage, particularly for countries facing traditional financial constraints or maybe navigating the complexities of IMF programs. This could genuinely set a significant precedent for other nations in similar situations, couldn't it? To actively consider and adopt similar strategies. It suggests a potential shift, maybe nascent, but a shift in how countries approach managing sovereign debt, building reserves, or even basic economic infrastructure outside traditional channels, a new avenue for greater economic autonomy.
Exactly. It's about finding creative, maybe unconventional solutions to deeply entrenched conventional economic problems. Problems that often feel insurmountable within the traditional financial framework. For countries that might feel constrained by the dictates of established financial systems or burdened by significant debt, Bitcoin and blockchain might offer an alternative, a potential pathway to diversify their financial tools, attract capital outside those often rigid conventional frameworks. This burgeoning collaboration between El Salvador and Pakistan could very well signal the early stages of a new type of economic alliance. One built not on traditional trade deals or geopolitics, but on shared innovation and the strategic adoption of digital assets as a tool for national resilience and growth. It's a fascinating look at how these technologies are reshaping international relations.
And it's not just Pakistan. El Salvador is also actively bolstering crypto use in Bolivia. And this partnership seems driven by a very real, very pressing, and frankly very painful currency crisis that Bolivia is going through right now.
This is another incredibly significant and very practical example of El Salvador's growing international influence and leadership in the crypto space. Just recently, July 30th, a pivotal event occurred. A memorandum of understanding was formally signed. It was between Bolivia's central bank, represented by its acting president, Edwin Rojas, and El Salvador CNAD, again represented by Juan Carlos Reyes. The specific, publicly stated goal of this bilateral agreement is to actively promote the use of cryptocurrencies as a viable, effective alternative to traditional fiat currencies within Bolivia.
That's a powerful statement, especially given Bolivia's current, quite harrowing economic situation. What's the critical context here? What severe problem is Bolivia facing that's pushing them towards crypto as a potential solution?
The backdrop in Bolivia is absolutely crucial to understanding the urgency and the profound significance of this partnership. Bolivia is currently experiencing a severe escalating currency crisis. It's characterized most acutely by a pervasive scarcity of U.S. dollars within its economy.
Right, a dollar shortage.
Exactly. And this dollar shortage makes international trade incredibly difficult. It hampers imports of essential goods, stifles investment, and creates significant destabilizing challenges for domestic economic stability, the daily lives of its citizens. In this environment of acute traditional currencies scarcity, people, businesses, they're desperate for viable alternatives just to maintain economic activity. And we've already seen compelling evidence of this adaptation happening on the ground. Tether's CEO Paulo Ardono, for example, has publicly noted the growing widespread use of U.S. dollar-denominated stablecoins, like USDT, and a practical, effective medium of exchange within Bolivia. This isn't just theoretical. It's a real-world problem crying out for an immediate, pragmatic solution. And cryptocurrencies, particularly stablecoins in this case, are actively stepping in to fill a critical void that the traditional financial system can no longer adequately address.
So this raises a really compelling question then. Is El Salvador effectively exporting its hard-won crypto expertise? Are they actively demonstrating how digital assets can provide practical, immediate, maybe even life-saving solutions to these really pressing economic challenges like a national currency crisis? It certainly looks that way. This move powerfully underscores crypto's real-world potential as a lifeline, maybe, for international trade, for domestic transactions when traditional currencies falter or just become scarce. It's a very tangible application.
And if you connect this to the bigger picture, it suggests that for some nations, crypto adoption isn't merely a political statement about being tech-forward or a speculative investment. It is rapidly becoming a pragmatic, maybe even essential response to severe and immediate economic instability. For countries facing acute shortages of hard currency, or maybe immense difficulties accessing global financial markets through traditional channels, digital assets, and here, stablecoins seem particularly relevant. They can offer a viable, agile alternative for maintaining trade flows, facilitating essential imports, enabling domestic transactions. El Salvador, having pioneered a national Bitcoin strategy, having navigated its own challenges, is now positioning itself as a knowledgeable, experienced partner, offering a blueprint maybe, or at least a guiding hand based on their own learning curve, for other nations looking to navigate similar turbulent economic waters. They are effectively showcasing a real-world use case for how these decentralized digital instruments can provide resilience when centralized financial systems fail.
It's truly remarkable, isn't it, to witness a relatively small Central American nation positioning itself as such a leading global innovator in this space, actively offering practical, cutting-edge solutions to other countries that are facing profoundly challenging similar economic problems. It really reshapes our understanding of where financial leadership can emerge from.
It fundamentally shifts the perception,
Yeah.
of where true financial innovation can and increasingly will originate. The established centers of finance, they might find themselves playing catch-up to these new models emerging from, well, unexpected corners of the globe.
So, as we wrap up this incredibly insightful deep dive, let's quickly recap the key takeaways that really stand out. We've seen El Salvador not only significantly solidify its position as a bold crypto innovator with its new investment banking law, a law deliberately focused on attracting sophisticated investors and enabling the unprecedented emergence of full-fledged Bitcoin banks. But beyond its own borders, it's also actively extending its influence, its expertise through strategic bilateral international partnerships, aimed at solving very real, very pressing economic problems for other nations grappling with traditional financial constraints.
It's a narrative that profoundly challenges conventional wisdom, doesn't it? And established financial paradigms. With nations like Pakistan now actively exploring Bitcoin as a core component of their national growth strategies, and Bolivia turning to stablecoins as a pragmatic, immediate solution to navigate severe currency crises. It truly begs a profound and maybe urgent question. How quickly might we see a fundamental, perhaps irreversible shift in the global financial order? where digital assets become not just niche investments or speculative things, but truly fundamental tools for national economic resilience, for international cooperation, and perhaps even leading to the redefinition of what a national currency fundamentally is.
And if that happens, what does this all mean? For the very definition of national currency, for the future of finance as we know it, and perhaps most importantly, for your own personal relationship with money in this rapidly evolving, increasingly decentralized financial landscape. It's a thought that truly invites quite a bit of further exploration and critical thinking long after this deep dive concludes.